The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 27th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must do each and every day. So let's begin our day with empowering beliefs. Like a farmer, please allow me to plant what I think are some seeds of wisdom to think about. And think about your interactions with folks and some of these statements here. You know, people, oftentimes they're unreasonable, illogical, and maybe even self-centered. Love them anyway. You know, if you do good, people will accuse you of being selfish, maybe having ulterior motives out there. You know what? Do good anyway. If you're successful, you will win false friends and true enemies. Hey, succeed anyway. Honesty and frankness, well, they make you vulnerable. But guess what? Be honest and frank anyway. The good you do today will be forgotten tomorrow. Oh, how true is that? Do good anyway. You know, the biggest people with the biggest ideas can be shot down by the smallest people with the smallest of minds. Doesn't matter. Think big anyway. People favor underdogs, but always follow top dogs. Wait for some underdogs along the way. What you spend years of building, folks, can be destroyed in a heartbeat, overnight. Build anyways. And lastly, give the world the best you've got, and you'll get kicked in the teeth. Give the world the best you've got anyways, folks. Hope everybody out there had a terrific weekend. Thanks for joining us. Let's go check out these markets out here right now. Dow is up 40 points. It's the leader in the clubhouse. It's traded down at 15,916. These markets right now are like, you know, maybe just first deciding to enter the water out here. You know, two people on one side. I can see two kids saying, no, you go first. No, you go first. No, you go first. And that's what we've got going on in the market here right now. You've got the Dow is trying to go first. Of course, it's the weak link. It has been the weak link out here. So maybe that's something for us to be paying attention to. The S&P, that's the second weakest link. So the two weak links out here are actually a little bit green here. Does that sound like a counter trend rally to you? Does to me. You've got the S&P up 2 points. It's trading at 1792. The NASDAQ is off. NASDAQ composite down 5 points. Russell 2000 off $1.80. Apple is the leader in the clubhouse, up $7.86. Caterpillar out with earnings before the bell. Beating top line, beating bottom line. They're up 6%, up $5 and change. Signet Jewelers up 6.5%. Amazon up 1%, up $4. Oramed Pharmaceuticals up 15%, up $3. Rayonier, that's up 8%, up $3 and change. Serona Dental Systems up 4%. Kihu 360 up 3.5%. Excuse me. To the downside, actually, Care.com. CRC. Oh, I think I was thinking Care, the ETF out there. Google is the leader. Oh, Google is the leader in the clubhouse. I do mean that's where the weakness is coming from inside of the composite. And there you go. You got Google is off $20 this morning, down 1.8%. LinkedIn is off about 1.8% as well. They're off $4. Biogen, BIIB, down 1%, off 4. A lot of 4s out there. Pharmacyclics down, trying to gain, and if it needs 50 cents more in order to be down 4. NetSuite is off $3.34. Priceline down $7. 3D Systems off $3. You've got Yelp is down $3. Our call number is 877-927-6648. Let's begin by taking a look here at the indexes. Let's go take a look at the S&P 500 first. Right now we're traded at 1792.04. What is it doing? Well, if you take a look at this candle formation from Friday, folks, that is a wide-ranging bar. You open at the high, you close right at the low. It doesn't get any stronger than that in a candle. In this case here, stronger to the downside. Markets do not end on candles like that. What does that mean? Does that mean that the market follows through today and moves lower? No. It means that the market has not done its work to the downside. That candle right there, that's a big, powerful candle to the downside. Only a real significant reversal in the markets will change that. We most certainly are not seeing that, at least not here as of 10:11 a.m. That is a powerful candle. Now, what did it do? If we take a look at retracements off of the December 18th low all the way to the high that was put in on January 15th, you'll see about the 0.78 retracement area. Where could this bounce to on a bounce? To set up the C point of the A to B equals CD down. Well, if you go from the high of January 15th down to the low from Friday, that's so far our low out here. The 0.618 level would be 1827. That would also be right at the top of the breakdown from Friday. So that becomes the first logical area. Doesn't mean that's where it has to move to. If we take a look at that logical area, that would then be setting up an A to B equals CD down. That would then come and test that December 18th low. That is very logical. A test of that low, which is a high volume bar, 1767.99 out there. So that is one potential outcome inside of the markets, inside of the S&P 500. At some point in time, either by a bounce that we see that takes place this week here over the next couple days, or because you're trading inside that swing point that says, okay, if you trade inside it, you can move lower. Right now, we're not getting any definition. I'm not seeing any definition here inside of the S&P 500. It's right now traded 1791.63. Let's go take a look at the NASDAQ, the NDX 100. It also having a type 1 strong bar to the downside on Friday, getting some additional follow-through here this morning, but that's because you got Priceline, Google, LinkedIn, Regeneron Pharmaceuticals, a number of Biogen, a number of the top weighting equities within inside the NDX trading to the downside. If we take a look at this complete, the 3 drive to a top pattern, yeah, it's a pretty close. Let's take a look at it. It was really off by a day out there. If you were looking for perfect symmetry, in this case here, we'll settle for just simply extraordinary symmetry, and that's really what we got as it moved up into that high on January 22nd. Typically on a 3 drive to a top pattern, let's get rid of the A to B equals CD pattern out here. Let me get rid of that formation tool. Now on a 3 drive to a top pattern, typically you're going to come down and test the bottom. That's going to be the also the December 18th candle session out there. If we take a look at going from the low of that session to the high, the all-time high, so not all-time high, the high on January 22nd, you see right now it's only on Friday, just kind of slid below the 0.382 retracement level, so 3503.76 would be a next likely target for it. Right now it's at 35.31, so maybe another 30 points to the downside here inside of the NDX 100. Of course, Apple is out with earnings, not of course, but they are out with earnings after the bell, so at 4:30 we ought to see a little bit of fireworks out here. Let's go take a look at the Russell 2002 is trading lower, down by 3 points here so far this morning. This had formed 2 3 drive to a top patterns. One had failed. That was the one with the shooting star on December 26th, confirmed with a bearish engulfing. That candle pattern and that pattern itself, the 3 drive, failed on January 15th out there, as it moved up and it formed its next 3 drive to a top pattern, and that took place on January 22nd. We're seeing a move lower. If we take a look at that 3 drive, you would really be using the lows of December 12th out there. That's your target area. That is, if you go from that low to the high out here on January 22nd, you'll see that it too has room to run to the downside to 1131, which would be your 0.618 retracement level right now to about 1140. So another 9 points or so to the downside. All these candles, long-ranging bars, some finishing at their session lows, some very close. They are very strong candles to the downside. They say that whether the market trades lower, ends up trading lower today or not, it says that the move to the downside is not over. Let's take a look at the Dow. That has been the lead dog to the downside. It's doing everything it can to fend off the bears. Caterpillar is doing what it can to help out, up $4.90. In fact, inside the Dow as we speak right now, if we take a look at laggards, you've got Visa, which is, I believe, is the number one weighting. Actually, let me tell you for sure. Yeah, Visa's the number one weighting. It's off $2. IBM's down 93 cents. Goldman Sachs is down $1.30 out there. So you got your top three weightings inside of the Dow that are pushing lower out here. Pushing to the upside, you've got Caterpillar up $4, Merck up $1.85, Boeing up $1.60, ExxonMobil up 53 cents out there. And as we take a look at the Dow wide-ranging bar, very bearish looking, very powerful, I should say, candle. Right now traveling out at 15,897. It will make its way down into the lows eventually here at December the 12th. That's where we'll get really a release of information. What has the Dow done? You know, it has completed an A to B equals CD pattern. That's for sure. If you come off of the December 31st high down to the low put in on January 13th and then back up to the level on January 21st out there, you'll see the 1 to 2 A to B equals CD is at 15,823.71, but still very powerful move on that C to D leg inside of the Dow. Let's go check out. This is perhaps what's more important than really taking a look at the daily charts, is actually spending a little bit of time on the weekly chart. So let's the monthly chart. So let's go do that, because you got the month ending here on Friday. And if we take a look at the S&P 500, if we were to end here today, you've got a bearish engulfing candle. Now, the last time that we saw a bearish engulfing candle inside of the S&P 500 on a monthly chart, when is that? Boy, we've got to go back really far in time. Looks like right here was May of 2010. So you've got to go all the way back to May of 2010 before you actually see a bearish reversal, not a bearish reversal, but a bearish engulfing candle out here. And that's important. As you know, if you've been following me, with regard to the other market tops that we have out there, we normally have a price relative strength divergent pattern out here. There's no reason for me to believe otherwise. This would say to me that even if we do get a bearish engulfing candle on a monthly chart out here, that we see a pullback, but we eventually see a move higher before we see the final top in the marketplace. But nonetheless, what we have to do is we have to take the information that is provided to us, no matter what patterns may have been that we may have seen in the past. Yes, it can be different this time, and so we need to heed the warning of a bearish engulfing candle. What does that mean? That says that at the end of the month, coming into Friday, if we see a close below 1806.55, did I say that? 1806.55. You're at 1788.79. That will confirm your bearish reversal signal, and we have not seen one of those on a monthly chart in quite some time out here. What does that set up? That sets up a retracement for sure. I would have to say it sets up a move down to about the 1716-ish level. You're trading at 1789. That 1716-ish level would be your 200-day. Is it your 200? I've got to go back and take a look. Should be the equivalent of the 200-day exponential moving average out there. Let's go take a look at the Dow. We're going to see really the same kind of setup here inside of the Dow, and this is why we're taking a look at the monthly charts right now. The Dow did have a bearish engulfing candle on August 31st, I should say, of 2013, but that was fended by the bulls in the very next session. If we see the Dow close below 16,087 and you're trading right now at 15,886, that will be a confirmed bearish engulfing candle. We'll be right back, folks.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow slightly green, still up 8 points. Red across the board here. S&P 500 down 3 points. Composite up 28. Russell 2000 down 8 points. And let's go check in on the composite. So we're looking at the monthly charts out here for the S&P and the Dow. Clearly, the leaders from a bearish standpoint to the downside. The composite here on the monthly chart not yet having confirmed. However, it doesn't really have that much further to go. What you'd be looking for here, in order to find some synergy across markets with regard to significant type of a pullback out here, inside of the composite, you're looking at the December 31st open, which was at 4,065. You're at 4,098 right now, so you got about another 33 points or so. But that's the number you want to be watching and paying attention to come Friday out there. Now, every bearish candle does need some follow through out here, but if you do not get a close below 4,065 on Friday inside of the composite, it's certainly where we've got the fight between the bulls and the bears in the marketplace. Now, it is just not there. If we go take a look at the Russell 2000, these have been the two strongest indices out here. Well, I take that back. Russell 2000 is already below the body from December 31st. Now you've got 3 of the 4 that we have looked at out here. That's a bear sash candle. And just simply because the body does not completely engulf the prior body. The open here in the month of January out here, just a tad below the close on December. That was, of course, the gap down that we saw inside of the markets as we came back from the holidays, from the New Year holiday out here. So you do have if in fact the Russell 2000 closes below 1142.30, and right now you're traveling at 1135, that'll give you 3 of the 4. Certainly with a bearish reversal signal out here. Let's take a look at the NDX 100. That should be similar to what we were looking at inside of the composite. But the number here, that's the New York Stock Exchange. Give me a moment here to pull up we'll take a look at the New York Stock Exchange momentarily. If we take a look at the NDX 100, its number, in order to form a bearish engulfing candle, would be a close below 34.96.19. You're at 35.20. 76. So with Apple coming out with earnings, should they disappoint, with their weighting structure inside there, you could certainly see something like that taking place. Now let's go take a look at the New York Stock Exchange out here. If we take a look at the New York Stock Exchange, it's been trying to bust above its 2007 highs. It tested that. It closed just slightly above it on December 31st. This, too, has a bear sash candle that has formed out here. That would say close below 99.25. Let me take that back. A close below 10,173.77 is what sets up a bearish reversal signal inside of the New York Stock Exchange. So those are the numbers that we're going to want to be paying attention to come this Friday's closed out here as we mark the end of January out there. Let's take a look at some of the ETF structures, some of the spiders within inside the sectors within inside the S&P 500. Let's go take a look at the technology sector, the XLK. Let's go see what it is doing, and we'll look at it on a couple of different time frames out here. The XLK having completed a 1 to 1.618, A to B equals CD up. That was coming off of the swing point low from June 24th, 2013, when it traded at 29.94. That was its intra-session low. Made a B point out here on September 19th, makes about a 0.382 retracement on October 9th, goes ahead and makes its way. Didn't complete 100%. The 1 to 1.618, that number would have been 36.19. We saw a move on January 15th to 36.05. 36.05 versus 36.19. Not too shabby out there. So far, we take a look at the XLK on Friday. That pullback was with some volume, 15 million shares moving into the, where's December 18th? Did it touch it? No, it did not touch it. December 18th had a breakout of 17 million shares. December 18th is really is where we are benchmarking much of the volume and where price is pulling back into. That is a high volume bar. Again, that had 17 million shares. The XLK pulled back on Friday with 15 million shares. So it's going to need more volume to truly bust out the lows here from December 18th. It has not tested the high thus far, which is 34.82. Right now you're trading at 34.89, so it looks like we're on our way down there. Volume so far in an hour's worth of trading inside of the XLK, 1.4 million shares. If you do the quick math on that, that says you would do about 8 million shares today. So you can see it's not maintained in the same pace. Of course, an hour does not make the trading day out there. So that is something we will be paying attention to inside of the XLK, because that is the single largest weighting structure inside of the S&P 500. The next weighting structure is the XLV. Let's go take a look at it. On Friday, the type of damage done out here, it did have volume off of its highs. It did so with volume of 13 million shares. Again, going against that December 18th day, there it had volume. That had 10.2 million shares to the upside. So has not tested the high yet, the high of which is $55 even Steven. The low here at $53.50. The XLV right now trading at $55.21. Volume so far today, 1.4 million shares. So again, also doing less than what we saw on Friday. Right now, the Dow's off 13. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 7 right now. S&P is off 5. Let's continue taking a look at some of the ETF structures here inside of the S&P 500. Let's look at the energy sector, the XLE. What we noted here on Friday was that the energy sector was breaking through its rising price channel. That is never good. That's a rising price channel going back to June of 2012. Testing the area, piercing through it's not a problem. When you close below it, like we did on Friday, that becomes a problem. And it did so with some conviction, 17 million shares to the downside, taking out a swing point with 16.7 million shares out there. And if we use that December 18th time frame, that had 15 million shares. So it had some little bit of juice to the downside. Now, the A to B equals CD to the downside because the energy sector now, the XLE does have a confirmed A to B equals CD down. That says your 1-to-1 level, which it already already hit here intraday is 83.82 out there. Well, it didn't hit that exactly. It got to 83.88. Now, the power out. Now, here's what you can expect, or here's what you should expect. Now, I don't know that the move over to the downside is done, because we had some nice strength on Friday to the downside out here. On a bounce, though, what you can expect, and that's and really, if I take a look at A to B equals CD down patterns, it says 82, 89, 81.73 is more likely the target. But nonetheless, and not even messing with Sasquatch out there, not even messing with that A to B equals CD down, what you would see here, you could easily see a bounce. What would be normal, especially when you've broken a rising price channel like this, would be for price to try to get back inside of that channel. That says at some point in time here, we should see a move up to about the, I'd have to say the gap down, or the move down, the breakdown from Friday, the high there, which is 85.61. That would be a natural retracement to try to get back up into that level. If you get back up in the rising price channel, that carries with it a whole different meaning out there, but it's not there yet, but that should not be unexpected out here. If we take a look at retracements, just simply off of the last swing out here, that would get you to about your 0.618 retracement as well, just off of that current C to D leg inside of the market. That was on the XLE. No bullish sign just yet, but you have completed your 1-to-1 A to B equals CD out there. Let's take a look at the financial sector. Let's see what it is doing. It, too, broke a trend line, broke a rising price channel, did it all. I imagine this also goes back to your November 2012 time frame out here. So you can see that area was broken, and the XLF now is taking on. So here we've got our first test of December 18th. That swing point is $21 even. Steven, you're trading at 21.03 right now, 21.03. So it looks like the low so far is 21.03. So it hasn't tested it per se, but it will. 99 million shares on that session, and what we saw on Friday was a downdraft of 70 million shares. So the XLF is, I believe, the second weighting inside of the S&P 5, second or third inside. I think it's the second weighting structure inside the S&P 500. So we ought to get a pretty good release of information here today. Doesn't matter whether it's second or third. And we'll see if we get a rejection of this December 18th low at $21. Let's go out to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How are you doing today?
Good. Where do you see a buy point for FCX? And POM, that's two.
Yeah.
POM and FCX, where do you see buy points?
Yeah, so in the case of FCX, this thing had been looking pretty good. It's on its way down to about 31.47 right now. It's trading at 32.28. I don't know if that will be your buy, Victor, out here, but that should be the next level where it moves down to. This thing here, boy, it had been such a nice, strong-looking stock out here. That's why you use stops and everything. If we go from a swing point low, let's see what it's actually trying to form out here from June 25th. Out to the high that was put in here recently. That was on January 2nd. The 0.618 area. So this says to me what you're likely to see set up is right around the $30-ish area. That should set up a little Gartley buy, a 0.618 Gartley buy. So I would have to say, Victor, right around 30. Let me do that again. I apologize. I didn't mean to hit the delete key, and I did. Yeah, so right around the $30.91 areas where I would be looking for FCX. But what you want to do is wait till you get a bullish reversal signal at that level. But that would be your Gartley buy pattern. What was the next equity you were looking for?
Yeah, I like playing this one because it pays a 5% dividend, POM.
POM. Ticker symbol POM. And is this POM, is this, I'm not familiar with, is this a utility?
Yeah, it's like a V shape right now. Where is it going to go, upper or lower? I guess you got to trust the utility. I'm not sure the Dow Jones utilities. Where do you think this is going, up or down?
The utilities, I know that you had called a couple of days ago and were cut off, and I put up a scan. I can't do it right now while I am on the show, but all the utilities were actually in a bullish mode. I didn't see what took place on Friday. I didn't take a look at it. We can take, but, inside this equity, and clearly you're going after this for its dividend out here because there's, what's that?
pays a 6% dividend. 6%.
6% dividend.
Yeah.
So if a 6. So at this stage here, it's just really traveling sideways in this little consolidation. Your problem here is your better buy on this is going to be at the swing point low from September 12th out here, $18, because, you can lose 6% of your equity real quickly out here. So the dividend that it pays out, can be, if this thing is not bought right. I'm sorry?
No, I hear you. Yeah.
Yeah. So the 6% on an $18 stock, all of a sudden you're down 90 cents and you're more than, you're probably right around 6% right there. So, and for this to trade, what's that?
No, it takes a year. It's $1.44 in dividends, so it takes you a year almost to regain.
No, exactly. Yeah, exactly. So that's why dividend yields are one thing. Buying it right is the next thing, and there's just no signs of strength in this to speak of. There, the sign of strength, Victor. I can tell you the sign of strength on this takes you back to September 18th, and right around $18.18. Yeah. So I'd have to say that's your target.
You were pretty right on clean energy. You remember you said it was going to hit 13 and go back down. Where's it going to go now?
Yeah, CLNE. Now, boy, this thing is moving down, huh? So even today. So, it's got that high volume low that it's contending with. So clean energy, wants to head to probably the 1063 area.
Okay. Sounds good.
All righty?
Thanks. Have a good day.
Hey, you bet. Thanks so much for calling. That was on clean energy. If you take a look at this stock as well, you can see really, pretty much a consolidation out here. And right now it's trading into this high volume bar out here, doing it with lighter volume. But this thing is going to, I take that back, it's trading into the swing point low, which is from October 9th, and the top of which is 1157. So when I say trading into it, that's really what I'm referring to, folks. I'm referring to that's trading into the candle. Now, 4 million shares there. Today, so far, clean energy, CLNE's done 534. So if you just did the math, multiply it times 6, you're right around the 3 million share mark. So it's coming in there a bit light. So, Victor, if you're looking to buy this equity, I would have to say you'd be looking for it to test the actual low, 1063, do it on less than 4 million shares. Let's put this on a longer-term chart out here because it doesn't look like a, there we go. So now this is actually a little bit better picture out here. What you really want to see inside clean energy is a test of the October 7, 2011 time frame, Victor. So you're looking for, I know Victor's gone, but what you're looking for, anybody out there that wants to trade clean energy, CLNE, watch for a test of the October 7th swing point. The high is 1111. So there's your Vegas number. You want to see it come in there on a weekly basis. Get to 1111, 1110 or less. Close back above 1111 and do it with less than 6.6 million shares out there. Now, pretty good chance it will do that, and pretty good chance that what it'll do is it'll trade down to 1063. So that's really how you line up the trade there. The daily chart and even on the weekly chart that we're looking at, that 1063 level is what shows up. So the ultimate of test is a test get to 1062 or lower, close back above 1111, and then here's the deal, though. You have to determine whether it's really worth the risk-reward, because all you're really looking at getting is maybe, somewhere between 1330 to 1482, and I just don't know if that's really the best kind of reward to risk trade inside when the markets offer you so many other trades out there. But that is on clean energy out there. That was on POM. As well as FCX. FCX, man, that is a surprise out here, the way that this has been trading. Volume on Friday was 16 million shares. It's already done 3 million shares today, so this thing still has some troubles. That is on Freeport McMoran, maybe a currency. It's probably a currency issue out here. That's probably more so what it is than anything else. Speaking of currencies, let's go check in on the currency pairs. Let's go check in on the Euro-US dollar. Let's do it on an intraday chart. If you know that right now the Euro-US dollar trading inside the cone of silence. It has been for months out here. It has tested the upper part of its range. Now that is set to move down to the lower part of its range. That's what the weekly chart was showing us. Let's go see what a intraday chart is showing us here. And this is the euro. Let's go see what it is doing here. You can see right now as it traded lower this morning at about 8:30, it made a 0.382 retracement. That was off of a swing point that was right down here. Come on, how did I lose this? No good. You don't like that when your system says not responding. In 1 o'clock in the morning on January 23rd out here, you had the euro down about 135.36 out here. So it has made a little bit more than a 0.382 retracement. What I do see, let me get rid of this stuff. What I do see is you had a little hammer candle out here and prices below that. So A to B equals CD down is in the process of being formed here right now, and that is going to take the euro, at least on this intraday chart, down to at least probably 136.26 level out here. If we take a look at retracements, let's take a look at retracement low to high. Says about 136.091-ish to 136.023 is likely where the euro will trade to. But I personally, I don't see any great trades inside this currency pair until that cone is broken. In the marketplace. Different set of circumstances with the pound and other currency pairs out here. Let's take a look at the Great British Pound. Let's go see again what it is doing here on a daily basis. Actually, let's take a look at the. Let's take a look at it. I want to switch over because we didn't look at the euro Japanese yen at all this morning. And if I don't do that, it won't send me a royalty. So I need to check in on the euro Japanese yen, because I am its biggest proponent out here. Really, you should be as well because of how well it tracks the U.S. stock market out here. Now, what the euro Japanese yen here is doing or has done, let's take a look at it. June 5th, 2009, that is the swing point high that it has broken above. That's at 139.21. You're at 140 and a bit of change. It's been down to a low 139.13. So 139.13 tests the 139.21. You've come back and you've tested this area where it's trying to break out of. That's a consolidation out here, inside of the euro Japanese yen. It is also just slightly below the 0.618 retracement out here. If the market is going to really crater, what we're going to see is we're going to see this area fail. We're going to see the euro-Japanese yen trade much lower than where it is right now. So right now it's up against some pretty decent support out here. It's against old resistance, becomes new support. We can move that line down just a tad out here. But so far, so good in euro-yen territory out here. Let's go check in on gold, silver, see what they are doing out here. Right now you've got gold, last time I checked, it's down to $5, so it is trying to test its descending price channel out here. We'll put the gold chart. This is going to be the daily chart that we'll look at momentarily. Well, that's the silver chart, but let's switch over to gold here first. As we take a look at gold on Friday breaking out of the trend line out here. You break a trend, you come back and you test it. That's what we have going on right now. If it gets inside of it, trades probably, if it closes today around 12.55, 12.56, we'll give it the 12.55 number right now. You're 12.59. That would not be a good thing. That would be a rejection of the trend line. Now, when I say not a good thing, we have a confirmed A to B equals CD up. We have a breakout of a channel line. We've got a breakout of a trend line. So we've got really three very bullish things in place here for Goldilocks. So what I really mean by that would not be very good is that what we ought to see is we ought to see gold just kind of churn around here sideways for a bit. But right now it's doing what it's supposed to do out here, which actually, gives you a signal to buy gold if you weren't already long gold out here. Of course, you want to see it truly reject this area where it is at right now. So you see a rejection of that, and that becomes another bullish feature inside of gold. Inside silver, a whole different story out there. Silver basically doing nothing, traveling sideways in a couple of point trading range out here. Must just be winding itself up, getting ready to catapult itself to higher ground. Right now, we've got the Dow up 26. S&P is back 2. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is up 21 points right now. S&P back 380. Composite off 33 points. Weakness out here. In fact, let's go check in on some of these equities here with inside the NASDAQ, the NDX 100 as well. Let's check in on Google. Google's leader in the clubhouse here this morning, trading at 1095. Let's go see what kind of volume is behind its move. It's got some pretty decent volume. Friday did 3.9 million shares. Today it's already done 1.9 million shares. It's done 2 million shares to the downside out here. So it's got, with that kind of move, says Google wants to come back and pull back and test that breakout from October 18th, that high 10.15, 11 million shares out there. If we take a look at retracements here, really just coming off of, to be fair, we have to use the proper area to come off a retracement. It's the bottom of the consolidation. It's the candle from October 9th. If we go from that low to the high on January 2nd, the dead cat bounce 0.382 levels, 1043.77. So it suggests that is the mark that it is at least headed to out there. That is on Google. Let's take a look at Priceline. PCLN. Let's see what kind of damage was done here on Friday. It's down $22, trading out at 11.57. This doesn't look to be too shabby out here. Looks like it's going to pull back. Well, I take that back. I spoke too soon. It's got some pretty decent volume today. 376,000 shares in an hour and a half of trading. I was off with 880. So it actually has more volume today to the downside out here. Or does somebody think that Apple is going to disappoint and that's going to take the rest of the NASDAQ down? I don't know. But it is, in the case of Priceline, the swing point it's trying to move towards is January 6th. That only has 656,000 shares. It'll have no problem with the volume moving down there. Let's see, you've got Jazz Pharmaceuticals, J-A-Z-Z, Jazzy one. In fact, I was going through some things yesterday, and I found my old license plate. And I do mean taking you back quite a few years. It was the Jazzy one. Did not realize that I had saved that license plate. That was for when I lived in the Detroit area. We used to have a jazz station, WJZZ, for all of you folks out there. And right now, the Jazzy one, though, in the pharmaceutical business, J-A-Z-Z, is trading down with volume today. 932,000 shares. Did 1.7 million shares off the top on Thursday. It's got more volume today. It's going to come down perhaps and test the breakout area here. So the Jazzy one, we want to be keeping our eye on this, especially if it can come back with some light volume, and that would be on December the 20th. It's got 2.2 million shares there. There is a gap, a sign of strength. That's at a price level of 118.16. That's a low of December 20th out there, and that was on the Jazzy one. So what are we going to be paying attention to today? All right, a number of things. Number one, inside of the S&P 500, you want to kind of peg the number 1791, 1792, somewhere right around there. If we see price close above that on any 120-minute chart out here, that'll indicate to us that we're going to see a nice market bounce out here. That's the first thing that we want to pay attention to. In fact, that is really, I would almost have to say, that's probably the only thing that we want to pay attention to out here. The Dow is trying to fend off the bears out there. The S&P also doing so. It's only down about about a little over 0.1% out here. I don't see the net advancing issues being significant enough to give control back to the bulls out here. What I do expect is that we could see a nice little counter trend rally out here. So we'll see if that takes place. Be careful, folks. Just keep your stops in place. And as long as you're with us here at TFNN, stay with us all day long. Basil Chapman is up next. Then we got Larry Pesavento. I look forward to seeing you tomorrow morning on Terrific Tuesday. Thanks, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.